Hey folks, David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis. Today is Tuesday, August 4, 2015. Okay, first a little housekeeping. Everybody got an email this morning about not sending around the videos. I'm just asking, please don't send around the videos. Otherwise, I'm going to have to do it a different way, and which puts it back behind the locked version or the where you have to log into the website. It's just easier for me and to do it this way. So I appreciate it if you wouldn't do that. Enough said. Please. It's a lot of work. I do a lot for everybody. And this isn't easy, so I'm just asking nicely, please don't do it. It's not right. Okay, thank you. Let's get on to the market. So interestingly enough, I also sent out another email today that I took off the two short positions we had, which were technically long positions, but long positions that are short the market. The XPSU, which is short the S&P, and the BIS, which is short the healthcare index, the IBB. And the reason I did that is pretty simple. I'm going to go through the reason why I did that today. And it looks like this. So the market is in a flux. It's in an interesting position. It's going to move relatively large and probably quickly in one direction or another. And frankly, I spent the better part of today using every tool at my disposal. I pulled out stuff that I haven't used in years to try and figure out what's going on. And I got to tell you, every time I took a look at it a different way, I got a different answer. Sometimes it was bullish, sometimes it was bearish, just to put it simply. And when that happens, and I've done this for the last 2 or 3 days, and when that happens, the best thing to do is normally nothing. Let the market show its hand. We're not going to catch the whole move, but that's okay. I would rather catch some of a move with more certainty, if you will, more of a probability than be wrong. And that's really why I did what I did, because it's a disservice to you if I'm not sure of what's going to happen, or if at least have a high probability or degree of success, or a degree that I'm 75 or 80% sure that something's going to happen, which I normally am. If I'm not in that camp, then it's not fair to you, looking to me for the analysis, to be on one side or the other. I would rather you be in cash than to take a risk that's undue risk. Sometimes the best position is no position, and we lose sight sometimes that cash is an asset class. You're not going to miss a trade. Here's the thing. This is what we tend not to do, or to do when we think about the market. Sometimes we think of it in terms of missing a trade. Sometimes we're not missing a trade. We may miss an opportunity, but would you rather miss a potential opportunity than be wrong? If I only have a 50-50 chance in my mind of being right or wrong for today, maybe tomorrow, it'll clear up and we'll get back to business. But if I only have a 50-50 shot at being right, why would I put my money at risk? I might as well flip a coin, go to the blackjack table, go to the craps table. It's the same odds. So I'm not interested in having a 50-50 chance. That's not what we're doing here, right? We don't, here, look at this, okay? We didn't have a 50-50 chance when I told you the market was going to top here, or when I told you that the market was going to bottom here, and worst case it would be here, but you knew what to do when the head and shoulders pattern that was this at the time, as soon as it closed above, you knew it was going to go here. Okay, you all remember that. That's not 50-50. Okay, those were way, way higher odds than 50-50. Let me give you an example of what I'm looking at. This is a very simplistic example, but it's gonna set the record straight as to why I feel the way I do. Let the chart come up for a second. Okay. Oh, I'm on the 24-hour. Okay. So here's the deal. Let me go over to the E-mini. It's easier to see what I'm talking about. Okay. It's just really, really easy to see. And this is just one of the... Sorry, I don't know why the computer's a little slow right here, but bear with me. Okay. So let me give you this example. So we know that normally, under normal conditions, when we have a big down move like this, we typically look for, and not all the time, but we know that a lot of times we'll see a down move like this, sideways consolidation, and then another down move. Okay, we all know that. Not every time, but a lot of times it works out like that. Okay, and you can see it. You know, here's a down move. Here's a down move. Okay, sideways down move. Okay, and it works the opposite too. We have an up move, sideways, another up move, an up move, sideways, another up move. Okay, went all the way up here. And it happens over and over again. It happens on daily charts, hourly charts, 10-minute charts, monthly charts, over and over again, okay? So we know, and we know where we're wrong when that happens. So for example, let's say we get a down move sideways, okay, and we know that if we close, here, I'm going to draw again on the chart for you. We know if we close above this area, okay, then that pattern is off the table. Now watch what I'm looking at. Okay, have a down move. I'm just going to keep drawing. I'm sorry, but this is important. Have a down move, sideways, and maybe another down move. But what do we have inside of that? And this is just the very, very simplest way I can explain it to you. We have an up move, sideways, and where are we going from here? So in simple terms, and I'm looking at hourly charts, I'm looking at 240-minute charts, I'm looking at 480-minute charts, I'm looking at daily, weekly, monthly. I'm looking at everything under the sun. I'm doing calculations 6 ways till Sunday. I'm looking at astrology. I'm looking at stuff that you wouldn't believe I'm looking at. Don't look at me like I have 3 heads. I'm doing this for all of us, okay? I'm doing calculations that my calculator is smoking right now, okay? So what do we have here is we have an up move, sideways, and maybe another up move. We have a down move, sideways, another down move. So until and unless we get, here's the number, okay, on the E-mini, until and unless we close above 2095.75, we'll round it up to 2096. We've got to close the hour, at least to begin for the bullish case to form, hourly above 2096 on the upside. If that happens, we're probably going to get up to 2100. And then if we get close above 2100, 2102, you're going to see new highs most likely in the market. That's the bullish case. The bearish case is if we essentially break below these lows here, okay, well, let me take that back. You see this dotted line? Remember this dotted line from last night? This is the line in the sand, okay? We should hit this number, whether it's overnight, tomorrow morning, or sometime tomorrow. This number should be hit. Write that down. Remember I said that. This should be hit, okay? If this number is not hit, then the bullish case is all in. It's all in. It's going to happen, okay? 90%, okay, if this number is not hit. But if this number is hit, and we begin to close hourly and then daily below 2075. And let me go over to the SPY because I put the same thing on the spider chart. Okay, and I translated it. I did the calculation, but it could be within 5 or 10 or 20 cents. But call it 208.40. Okay, 208.40. If we don't go down here tomorrow and touch 208.40 and then go higher, and we begin to trade below hourly and then close daily below 208.40, that's the bearish case. Okay, so there's your E-mini and there's your SPY number. Okay, so it's 208.40 on the SPY, and one more time is 2075, give or take a point or so, for the bearish case on the E-mini contract. Once again, we've got it. If we close below these numbers convincingly, then most likely the bearish case is on. If we touch those numbers and firm up and then begin to trade higher, okay, and then we get above the 2096 on a closing basis, then the bullish case is on. And this is just the tip of the iceberg, folks. I wish I can give you everything I know. I don't have enough time on the video to do that. I'll bore you to death. But all the calculations, I'll do a calculation one way, it'll come out with the bullish case. I'll do a different calculation, it'll come out with the bearish case. It's driving me mad, and I'm giving you the Cliff Note version, believe it or not, but this is the best I can do until the market clears itself up. It will, okay? It certainly will. But until the market clears itself up, there's very little reason to take on risk. Okay, don't feel like you're missing anything. Look at the daily chart for a second, okay? Let's go this way. Let me look at the daily chart of the spider, all right? And this'll clear it up, all right? This is the 60-minute. Let's look at the daily chart, okay? If we know that the bearish case is on, our first stop, our first area of support is going to be down here at 202, 201.50 in this neighborhood. There's plenty of room to make money on the downside, okay, from here. Forget that line. Let me do that again. Okay, my hand slipped with the mouse. I have to draw this with the mouse, okay? It's terrible. I hate drawing with the mouse. There's plenty of room if the bearish case is on to make money, okay? Conversely, okay, if the bullish case is on, we may make new highs, we may not make new highs. We'll know it as we get up there, but the market is such in a flux right now that I wouldn't put my money at risk. Therefore, I wouldn't suggest you put your money at risk. And that's the story. And that's why I needed to give you that type of video today, because it's important. Sometimes there's no reason to put money at risk, and I think we're in one of those times right now. So just keep it in your pocket. It'll clear up tomorrow or the next day, and then we'll be back telling you the numbers and all that stuff. And just to be frank with you, look at this. I'm going to go to the 10-minute chart of the spider. I put these numbers on the chart for a reason. 208.90. Look how that held. Okay. 209.72. Look how that was resistance. Okay. These numbers are not for fun. These numbers are not for show. These numbers are real numbers. I'm just telling you right now, don't risk it until we know, okay, until the market clears itself up. We're in the middle of a range. You can see it here. Here's the bottom. Here's the top end of the range. We're smack in the middle. You got to wait for the market to clear up. All right, enough on that. So let's look at something else. And by the way, this is another, I'll just give you one more thing. The IWM, okay? The IWM today, let's look at we'll just look at the daily chart. Okay, the IWM, small business across America, the IWM was down about 0.4%, a little less than 0.5%, but here we did again. We tested the prior neckline of the head and shoulders pattern. We still closed above it, yet the IWM was down about the same amount as the spider today. And this is the spider after the close, which sold off slightly after the close. So either way, that's not telling us anything. But look at this, okay? The transports. Look at this. What do we have in the transports? We have an up move. We have sideways consolidation. It's telling us that another up move is coming. And this, you can see the confliction here, okay, or the conflicted nature of what I'm looking at. Now, what do we have? We have an up move. We have 1, 2, 3, 4, 5. I'm suggesting that within the next day or two, this pattern will either play out to the upside or fail to the downside. And usually when a pattern fails, it's usually a larger move, and at minimum of what it would have moved to the upside. How much would it move to the upside? At minimum of to the 85.30 up here in this area here, probably slightly more. Okay? So, you can see what I'm looking at here. You can see the trouble I'm having. There's too many different varying things going on in the market. Okay, we're going to move on to the gold market, and let's run through the other stuff. And here we go, okay? Let me go to the hourly chart of the gold market, and the line in the sand is 2089. We're at 2087. Okay, that's not enough, and you can see we tested 2089 today and failed. It's not enough of a move underneath 2089 for me to have conviction that we're going down. But look, think of what I just showed you on the transports. Flip it around and look what we're looking at. Down move, sideways, readying for another down move. We kind of had a test candle today. We'll see. Okay, so we don't want to necessarily jump on the short side of the gold market, but I know some of you trade futures. And if you want to trade futures, you can trade against a close above 2089. Give it a couple of points leeway, wiggle room, if you will, if you want. But you can trade against that number on the downside if you want to be short the market here. Just be aware of what you're doing. I know you are. If you're trading futures, I know you're aware of what you're doing. But you have to understand that in the bigger picture, let me just show you a daily chart for a second, okay? This is bearish, okay? Down move, sideways, maybe another down move. I told you the numbers last night. I'll tell them to you again. Let me just get my notes out. 2065 to 68, and then 2048. Pardon me, 1065 to 68, 1048. First, we have to get to 1065, 68 on the downside, okay? That's a pretty big move on the downside. You don't want to get caught on the short side. You don't want to get caught on the long side if the market's going to get moved down to those numbers. Until and unless we close above 1105, it's still a bearish market, and that's my stance, okay? Nothing's really changed in the gold market. Let's move on. The oil market. I told you that we were going to let the market show us, okay, it's fluttering around. We've traded above 46, below 46 today. We're trading at 46 right now, 45.99. We need more time. We need the market to show us its hand. We need the market to show us what it's going to do. Let me go to the hourly chart. You can see here the market's trying to move, okay, but until and unless we get above this area here, okay, and then this area here, these are extremely tough resistance points right here to get above, okay? So until the market can close hourly above these levels, it's going to be a tough endeavor. So we've got to let the market show us more, okay? And that's really the story in the oil market. I don't really have any new information in the crude oil market. It just is what it is, and we're going to have to deal with what we deal with. So there's a no trade there. Let the market show us its hand. If I had to say, are we going to see higher or lower prices in the next couple of days, I would say we're going to see higher prices in oil, but it's not from a technical perspective. It's really from a sentiment perspective. They're so bearish, the oil market, that you usually see a bounce in the oil market. And where is the bounce going to take us in the crude oil market? I would say probably another 75 cents to maybe $1 higher. And that could fail easily. That's not anything to trade. It's just something to be aware of. That's all. Until we see a pattern develop, until we see definitive market action, there's really no trade here. Okay, let's go over to the bond market. So the bond market, here, let's go to the daily chart. Remember when I said until we close above this area, if we closed above 123.50 in the TLT, then we'll probably fight this 200 period, but we'd probably get up to this area here. Well, this was a pause to down day, but don't let the bond market fool you, okay? Because this could happen just as easy as anything else. Another sideways day, another sideways day, and another sideways day, and this could be bullish behavior, okay? It could be stemming from this move here. Up, sideways, up. What did I talk about? I talked about, in the bond market, I talked about the A, B, well, here, let me do it from here. Pardon me, I'm going to redraw it. I talked about A, B, C, okay? This really could be developing into a larger A, B, C, or that was sloppy, pardon me. It just could be the continuation move higher. Make no mistake about it. The 160 in the 30-year Treasury bond and this 126.50 is no joke. That number came up in a calculation, and we have to be aware that that's very possible. That could mean significantly lower interest rates, higher bond prices, at least in the shorter term. So don't let the market fool you. Until and unless we get to, here's your line in the sand, okay? I can pretty much tell you that unless we get below this area here on a closing basis, then this bullish pattern is still intact. So there's your story in the bond market. The dollar, okay? I said we were probably going to move higher in the dollar. There was a higher likelihood that this was a bullish pattern, okay? Where did we get to today? We got to 98.10. I think the high today was 98.10. I told you last night 98.10. If we got above 97.75, there it is. So the next area of resistance will be 98.60. So that's working in our favor. Natural gas. Natural gas is playing games with me. I told you this market is a widowmaker. I don't love to trade in the natural gas. I don't even like to trade in the natural gas. In fact, I don't trade much in the natural gas market at all. We fail, we go back up. It just goes back and forth, back and forth. It's very hard to get more than a 1 or 2 day read in the natural gas market. Therefore, it's hard to get a trend. I mean, look here. You have an up move. It chops around, down, up, down, up, down, up. It's very hard to get a definitive trend like this and stay with it in the natural gas market. This, you almost have to be a religious person to catch all of this trade and all of this trade. It's very difficult in natural gas. I only give you what I see in natural gas because I know a few of you enjoy it, you like it, you do trade in it. That's fine. I just give you what I see on the charts. All we did today was get into the moving averages. I can't even tell you whether we're going higher or lower tomorrow. It would be a fool's game for me to give you that. I told you that once we broke below this, it was bearish. Then we got above it. It's a fool's game, in my opinion, for me to tell you something I don't know. I don't know what the next move is in natural gas. All I do know is this should remain good support. This should remain good resistance. All we are is in the middle of a range. We're in a channel. That's really all we are. If you look at it, if you pull back and look at it objectively, this is just a channel. We're just chopping around here. Eventually, it's going to break one way or the other, and it just hasn't yet, and that's just truth be told, okay? So that's pretty much everything I have. I wish I had more definitive directional moves to tell you in these markets, but I'm telling you what I know. And sometimes if I don't know, I'm not going to make it up. It's a fool's game. It's giving you a disservice. I'm not going to do that to you. What I'm telling you right now is we're going to wait for some of these markets to clear up. And once they do, we'll have more definitive and directional moves on our hands. And that's the way it is. Sometimes it happens. I'm David Frost, my strategic forecast. Thanks for tuning in. Thanks for being members. Thanks for tuning in for another episode of Common Sense Market Analysis.